You were listening to chartingwealth.com for Tuesday, the 19th of December, 2017. Sorry we are coming to you so late. We've had some technical issues and we are traveling, but nonetheless, we are here. What do we see going on in the market? S&P 500 up 0.63% and the Q's up exactly the same, 0.63% for the day. On Monday, the 18th, we see TLT, the 20-year bonds, down almost 1%, 0.91%, and gold up 0.46%. First, let's tune into the S&P 500. Don't forget, at the end of the month, we will have another quarterly report for all subscribers, so please make sure that you subscribe to our daily market podcast every single day at chartingwealth.com. It costs you nothing. Go there, put in your email address and your name. Now let's move on and see what we see. My friends, we are continuing to see rocketing up. Remember, we had a weekly vertical crossover going up all the way back on the 29th of September. We've only had 1 week with a sideways slide, a doji, meaning indecision. Market was just digesting all those gains, continued to shoot up, still well above the weekly trend line, and we just see things go, go, go. Now, let's go from the weekly to the 2-day. What do we see there? We see there was a little bit of a pullback on the 2-day candle ending on Friday the 15th, and the first day of the week, the first day of the latest 2-day candle is up. We see that the price percent oscillator continuing to go up. The derivative oscillator pretty much flat, but again, prices continue to go up on the S&P 500 as we dig into the 2-hour chart. What do we see? Really flattening out, just sort of topping out and hanging there as we look at the last 2 days on the 4-hour candle. So again, just keep your eye on the prize on the S&P 500 as things continue to, well, again, it was up for the day, but as we look at our Heikin-Ashi candlesticks, we see things sort of topping out and sliding, but price percent oscillator still going up in the derivative oscillator. So those are good things to see. Just keep your eye on that 4-hour chart. That's where we are on the S&P 500. What do we see different on the Qs? Well, the Qs has started rocketing up, crossed over going up a little later than the S&P 500. That was back on the 27th of October. It has been up but for 2 weeks, the week ending the 1st of December and the 8th of December. Again, a sideways slide, maybe digesting all those gains on the weekly chart. And then last week it was up, and we see so far this week, just the first day of a 5-day candle, the price percent oscillator moving up, derivative oscillator continuing to lose energy, but remember the king of oscillators is our price percent oscillator. We've got a great training on that. If you would like to study it, please do so. It's available at the website. Now, as we go to the 2-day chart, what do we see? We see that on the Qs, the 2-day chart just started crossing over. That candle has not ended yet. It just started drawing on the 2-day chart, so we'll continue to keep an eye on it. The derivative oscillator has crossed over, but the price percent oscillator has crossed over. Derivative oscillator still in the negative, but looks like it's getting close. And again, maybe when this candle is drawn at the close of the day on Tuesday, we'll see a crossover going up there. But that does appear to be imminent. After 3 candles, it's about time for that to happen. What's going on the 4-hour chart? Well, it crossed over going up all the way back on the 8th and has continued to rocket up a few 4-hour pinches of some drawbacks, but again, pretty much going up, particularly over the last 2 days. Strong up movement on the Qs, and like we said, the S&P 500 and the Qs, the NASDAQ 100, another name for the Qs, up 0.63%, both exactly the same for the day. That's sort of rare, but interesting. So stocks are up. Now back to the weekly chart. We'll check out 20-year bonds. What do we see going on there? We see that 20-year bonds had a weekly vertical crossover going up back on the 1st of December, the week ending the 1st of December. Things have been going up for the last 3, well, this is coming into the 3rd week, first day of the 3rd week, but we see that the price percent oscillator's gone flat, derivative oscillator still moving up, so just continue to keep an eye on what's going on there. Again, it's nice to continue to see that upward price movement. That's typically what the weekly market crossover means to us. And let's take a look at the 2-day chart. Of course, it crossed over going up back on the 3rd of November and has been really herky-jerky moving up. That's why we wait for that weekly vertical crossover to really confirm when there's been enough up movement to give us that big wave and big push. So far, we see on the first day of this latest 2-day candle pretty much a red spinning top, some indecision after the prior 2-day candle ending on Friday being a strong mover up. The price percent oscillator is actually headed down. Derivative oscillator appears to be getting somewhat flat as we go to the 4-hour chart. What do we see? Well, decidedly down. Again, it was down almost 1% today, 0.91% down in the morning, really strong in the afternoon. So again, keep your eye on the price there on TLT. We did have that beautiful weekly market, weekly vertical crossover going up, and again, it went up strongly and then it sort of slid down strongly and then started moving up in the afternoon on Tuesday the 12th, and this is the first time we've had a pullback since then. So again, just keep your eye on that, particularly if you are in that weekly vertical crossover move. Lastly, we will go to gold, up 0.46% for the day. Now, gold has been in a confirmed strong down move since we had the weekly vertical crossover going down back on the 6th of October. Went flat for a couple of weeks and then down, flat again for about 4 weeks, and then really strong down for the week ending this last Friday, the 8th of December. And again, the week started off down as far as the weekly, that prior week was down really strong. The last week was also down strong, 2 strong down weeks, and then as far as the week has started out, we pretty much have a doji, things a little flat, again up 0.46%, but compared to that strong down movement over the prior 2 weeks, not much so far. And again, we have both the strong element of the weekly chart pushing it down and the 2-day chart. Now let's zoom in and take a look at what's going on the 2-day chart. We can see that it flattened out, started moving up, hasn't crossed over yet. So of course, what we're seeing is the bottoming somewhere around the 118.50 mark and then bouncing off that. And again, it has pierced the 2-day trend line, but still below the weekly, but do keep your eye on it. Don't have a crossover yet. And again, until we have one, we're not going to make any specific calls there. And then lastly, what do we see on that 4-hour chart? Well, as we reported to you, we saw that crossover in the morning on Thursday. And again, as we hit the 15th, we told you that the 4-hour chart typically stops working very accurately for gold, but so far things are moving up. Let's see if it stalls on that weekly trend line. It sort of topped off at about the same point in the morning and afternoon on Monday. So we'll continue to keep our eye on things. Those of you who are simply using that 4-hour chart as a total trading chart, you can sure continue to do so. That's where we are, folks, as we end the day on Monday the 18th and go into Tuesday the 19th. Appreciate you being with us, bearing with us for being so late in getting things out today. We'll endeavor to do a better job as we travel tomorrow. Thank you so much. We love to hear from you. CW at chartingwealth.com if you're not already signed up and receiving all the benefits you get from being a subscriber to our daily market podcast. You need to do that at chartingwealth.com. God bless. All the best from the whole team here at Charting Wealth World Headquarters.